So we'll take a look at my trades today. I think we're getting these two measured legs up, testing the top of what I believe is to be a range. Um, so I think this is the chart I was looking at mostly in the morning. So yeah, I think I took a trade last night, went long. Oh, I was not looking at this chart when I took that. Probably this. Yeah, so uh, went long here. Um, Thinking that the people who went short here got trapped, so I just went long up here. And my target was like 8 points, but it went sideways for a while, and I wasn't trying to stay up late, so I just got out. Um, I think with like one tick. Came in this morning, prices were going sideways, went long above this bar. I think at that point I was looking here, yeah. So this starts off good, but then it turns off out to be, clearly a trading range. So eventually I got out. I wish I got out earlier. Looks like I might have gotten out with a loss right there. Then I get long again and get a very small profit on the first one, and it looks like a small loss on the second one, second contract. Went short here, got 4 points because I figured it was a trading range. And then what I started to look at was it here? Well, I started looking at a few things, which was that Al Brooks has said, like, sometimes if you get, you're in a just bear channel, what happens is you'll get an early rally and it turns into a sell-off, and that's what creates these tails. So I was hoping on that, or not hoping, but I was thinking maybe that was what we were getting. And so we get this doji, and that's when I was like, okay, I'm gonna hold this because this is looking like this was looking like a bear channel, which it was. Probably starts right here. And I should have drew this channel. You get this sell climax, and I was up like 13 points, but I think that's where I was just hoping. You're hoping that this turns down and tests the low. And so I still ended up with, I think, yeah, 4 points profit. Is that 4 points on this one and almost 4 points on the second one? Then I go short here, get 4 points on the first one, 1 point of loss on the second one. And at this point, it's a range. Price is flip flopping, but I wasn't trading it like a range. I was trading it like I was hoping for a sell off. And so that's when it got messy in here. And at this point, after this trade, I just started not thinking about risk, buying, selling. You see, buy this climax. And this is where I should have stopped. I was like, why am I risking 9 points on two contracts? That's like 3 times what I'm comfortable with. And it's still in a range. This is the chart I was looking at. It's a broad bull channel, so it's basically a range. And I bought up here. There's no confirmation of the breakout. So, once you follow the rules, you're going to be making a lot more money. Sold here, which isn't a bad sell because it's like you're playing the range, but the problem with this was that I sold two contracts and I couldn't afford that. And so my risk was tiny. You can see I sold here, had to put my risk right there in the middle of the bar, and then it went down to where I thought it was going to go. And then we get this buy climax, and we had confirmation on this chart, so I bought that. I don't have a problem with that because it was clear that we were breaking out. and I took profits at a measured move. So uh, what could have been a really good day turned out to be a bad day, but I learned from it.